What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at where the individuals holding Bitcoin are positioned on the network. So in other words, what we mean by that is we're taking a look at this metric, which is on the horizontal axis here. And what this shows us is how many Bitcoin are positioned at each individual price. So for instance, when we're looking here at around $64,500, you can see that there's approximately 175,000 Bitcoin being held there, okay, plus or minus. Now, the reason that this metric is hugely important, and we've looked at it many times in the past, is because it can really point out for you, statistically speaking, where you're likely to run into a support and or a resistance level. So when you're moving down, it kind of shows you where you have a support level at. Now, conversely, when you're coming to the upside, if we were, say, going from where we're at now at around 20K up to around 30K, if you run into a lot of holders, which you can see that based on this metric here, there are a fair number of holders of people that bought Bitcoin at around 30K. As you move up into their cost basis, they are more likely to sell. You're more likely to hit an area of resistance there because especially when you're coming down from, 30, 40, 50% down from your investment level. So, your cost basis, if it was around 35K or 40K or even 30K, you're going to be down right now between 30 to 50%. Okay. So those people, if you come back up to their cost basis, some of them anyway, will be willing to get out of the trade at even, and they'll be happy to do so because of the fact that they've been down so much potentially for so long. So like in the past, we've seen that Bitcoin has gone on these huge corrections during the bear market where we're down 60, 70, greater than 80%. And then on the way back up, we meet resistance at particular prices because people are willing to get out of that trade at even. And, we use a variation of this metric called the volume profile visible range, which is more or less the same thing, but it's not as accurate as this is. This is showing us pretty much exactly where these Bitcoin are held at, whereas the volume profile visible range is only showing us where significant levels of volume happen to have been traded in the past. Now, there's naturally going to be some overlap because if there's more volume at a particular level, you're more likely to run into more holders of the asset at that same level. All right, so for things like Chainlink, we've been able to exactly identify where the price was going to hit a level of resistance at and sort of get stuck at that level by using the volume profile visible range. And we've also done the same thing for Bitcoin using both the VPVR and this metric, which is the supply distribution. Although I would say that the supply distribution is in general going to be more accurate. So with all that said, let's get into the analysis for today. And what we can see is that, we're just going to think about this broadly for right now. So there are a significant number of holders right at around this level that we're sitting at. So you can see that we're down here. We've actually fallen now below 20K again. We're down to around 19,800 or so. And you can see that there are a significant number of Bitcoin holders kind of right in this neighborhood where we're sitting at. But importantly, I want you to take note of one thing, and we're going to really focus in on this in a moment here and sort of, laser in on where we're at right now and specifically what's below us, because we want to know where could the price fall to if things continue to get ugly, if continued economic news comes out that's signaling that we're in for a prolonged recession and potentially worse. All right. So the prices that are above us, those aren't really what I want to key in on today, because ultimately I don't think that we're imminently looking at upside from here. But I do think it's much more likely, if we're just playing the probabilities, that we head down from here. And so I want to identify where some potential resistance levels are going to be. But I want you to notice that we have a huge number of Bitcoin, kind of, 400,000 Bitcoin right at this 19.5 level. And then you can see that 300K, 300K, 200K. So there's a million and a half, maybe up to close to 1.75 million Bitcoin sort of being held right now between this $19,500 level up to around here, up to around this $24,000 level. All right. But you'll notice that these are blue, and we have this labeled up here. Blue indicates that these are short-term holders, people who have owned the asset for less than 6 months. All right. So these are going to be a lot of day traders, and you'll notice that any time that I show this metric, the largest values tend to cluster right around where we're at that time. And that's because the majority of the Bitcoin volume on any given day is from short-term traders. All right. So they are always going to sort of build up a stack kind of right where the price is at. And that's exactly what we're seeing. Now, we've also shown metrics in the recent days which have shown that people are acquiring Bitcoin at these levels, and they're doing it at accelerated rates. But, we're not seeing enough buying from here, from this point where we're sitting at, given all the uncertainty, given the, lack of liquidity in the crypto market. But in aggregate, what you need to see these massive price moves to the upside is typically going to be more than what we're seeing right now. All right. So we know that we have this short-term holdings of Bitcoin right here from 19.5 up to around 23,000, 24,000. And actually, let's start with what's above us, because, why do the guys above us, why do they matter at this point? We said that they are going to act as resistance levels. So as we're kind of, as we're moving up into like these ranges here, let's say we started going back up to 30K, up to 40K, right? Why would these guys matter that are holding the Bitcoin in that level? And the reason that they matter is it's not for necessarily when we're moving up, because we're not really expecting that we're going up to 40K within the next week or two. The reason that they matter, and you see that there are a huge number of coins being held up at these levels. So, just millions and millions of coins. And these people are sitting at huge losses right now. All right. These people are sitting on top of massive losses. And where did these people buy at, right? So we're looking at the people that bought at 30K, 40K, specifically the people that bought it around 40K and above. They bought in this area right here. And that is typically going to be newer investors who bought in to the hype of the bull market. And this happens every single bull market. We see people come in and sort of buy into the hype. Now, unfortunately, this was a protracted bull market. So we've had enough time here where these newer investors have come in and they've acquired a massive number of coins. And we are talking a massive number of coins, right? We're just talking millions and millions of coins are sitting from this 40K level above. So why is that relevant? And that's relevant because of the fact that we can't then say that we've had the max pain level where we've shaken out all of these investors, because you have all these guys sitting up here now and they're on a 50% loss. They're on a 60 to 70% loss, right? Some of them are even above a 70% loss, although it's not many. But we are talking about millions of coins right now, which are sitting on a 50% loss plus. And so that creates risk in the market, and it creates risk from the perspective that these people could ultimately become sellers of the asset. And if we started to see the price move down to 15K, 10K, you could start to see some of these people panic and sort of lead to a snowball effect where they're selling, and the price is continuing to go down. They don't understand why, and it leads to just sort of a cascade effect capitulation. So that's definitely one of the risks in the market. And you also have to think about, I think that this is certainly to a much less degree now, but you have to consider investors who are using their Bitcoin as collateral and the liquidation risks. So if people are still using their Bitcoin as collateral, although we've seen the total amount, the total number of dollars locked in the DeFi space has absolutely plummeted over the last few months. So I don't think that is necessarily where the majority of the risk is coming from, but that is something to consider also, that as the price moves down, liquidations occur, these people will get, whether they want to or not, they get forced out of their position that they're maybe holding at these various levels. So that is the risk from these millions of coins that are sitting above us. It's going to be capitulation risk from newer investors who panic sell as the price continues to go down. If you look back to some videos I made in December and January of 2021 and 2022, when I was talking about Bitcoin going down to the realized price, going down to around $20,000, people were just incredulous. They could not believe that I was saying something like that. People were losing their minds, and they just did not expect that the price could actually go down to these levels. In fact, I've heard some of the bigger YouTube channels talking about the fact in the past, they've clearly changed their tune now because, they changed their tune whenever it suits their needs. But we've heard them say that if Bitcoin goes below 20K, that invalidates Bitcoin, and it's Bitcoin's no longer a worthwhile investment, because they didn't expect it to happen. So they felt confident in saying that. But if they were looking at the data, if they were looking at things like this, if they were looking at the realized price, and if they understood the history of Bitcoin, they would have known that it was very, very likely that that was going to happen. And we've been saying that for months and months and months, all the way back into 2021. You need to be careful as we're moving down, because there's more downside risk in these markets than people are appreciating. And you need to be careful with altcoins. We've been making that video since basically I started my channel. The risk of altcoins is that they typically get hammered against Bitcoin. And that's exactly what we've seen. We've seen numerous top altcoins now down greater than 90%. And you have to remember that the difference between losing 70% of your investment value and losing 90% of your investment value is massive. It's not just a normal 20%. And you could go do the math, but we could just think about it quickly. If you're at $100 and you go down to $30, you've lost 70%. But what does it take then to get down 90%? And it takes another 66% loss from that $30 level, right? Because you have $30, and if you go down to 10, you've lost another 66%. And that's something people don't think about, because then how many more doublings do you have to get even back to your cost basis? You have to go up 10x to get back to your cost basis when you're down 90%, but you only have to go up around 3.3x when you're down 70%. So the difference between those two price levels, or the amount that you've lost at any given level, is massive, and it's bigger than people appreciate. So that's above us. Below us, let's take a zoomed in view of what's below us, because this will kind of help us understand where we're at right now and what may be coming. All right, so this is a zoomed in view, and I'm showing us from 2017 back here when the price was right at around $600, $700, all the way up till today. But we're excluding the things above us. We're excluding prices from 30K and above, because we don't need to see those. They don't really matter for what we're looking at here. We want to know what is our downside risk. And you can see that where we're sitting at right now, and I've just put some numbers next to the key levels here, that there are around 440,000 Bitcoin sitting right at this 19.5 level, plus or minus, all right? There's around 440,000 Bitcoin sitting right there. Now, if you come down here, the number of Bitcoin sitting at these levels, and we're talking from $500 and below and from $1,000 and below, they break the scale. So we haven't even completely included those on the list, nor have we completely included the number of coins that are sitting right at around $4,000, because there's around 800,000 Bitcoin sitting at $4,000. And where were those primarily purchased? It was right here. It was an institutional investor who bought a massive number of coins right when we had this capitulation event back here in November of 2018 into December of 2018. That guy has bought a huge number of coins, and he's sitting on the majority of them. Not many of these coins have moved since that time, okay? Now, when we go even lower than that, from around $1,000 down to $500, there's another approximately 700,000 Bitcoin sitting there. And when we look at coins sitting from $500 and below, we're talking about Satoshi coins. We're talking about original Bitcoin here. These coins, just number a huge amount. We're talking about 3.5 million. And we know that Satoshi's coins are, for all intents and purposes, are likely lost, and a huge number of these other coins are likely lost, but they're not all lost. And that's important, because we constantly see selling coming from coins that are 10 years or older at this point. And so these are going to be those $500 and lower coins. In fact, they're even priced lower than that. But those guys who have those coins that are selling, they sell a small amount at a time. And what you'll notice here is when we look at the blue color, these are going to be your newer coins. The yellow is going to be coins that are 6 months to 2 years old. And then these coins in pink are 2 years or older. So these are going to be your oldest coins. Where we're sitting right here, so we are right in this price range. We are trading in this range from around 19.5 up to around 22 or so. You see that there are now a fair number of coins, but like we said, these are short-term traders. And so those guys aren't going to offer a huge amount of either support or resistance. They're in and out basically every day. Now, what's below us? And this becomes somewhat concerning here. So let's go below this 19.5 level and into this zone right here. Okay, so when we look at that range below 19,500 all the way down to around 12,500, there are just simply not a lot of coins there. In fact, when we look here at right here at around 13,000 to 14,000, there's around 100,000 coins, but it's very sparse other than that. I mean, everything in that zone is 25,000, 25,000, very few coins, because a lot of these people are going to have bought during this bull market and then they've already sold once we got up closer to the top. Now, where does our true support level come in then? And it in my opinion is going to be this zone if we start to lose those lower prices from 19,005 down to around 12,005. And this is unfortunate, and I know this is not going to be what people want to hear, but quite frankly, we don't really care what people want to hear here. I'm going to show you what the data is, and if you don't like it, then you're in the wrong place. So below this level, we actually do have a huge number of coins. So from 12,000 down to around 8,500. So this is the place where I'm looking for the asset to truly find support should things really get ugly, because there's around 2.2 million Bitcoin in that zone, right at around $12,000 down to around 8,500. And then below that, there's another 1.3 million Bitcoin sitting down if we come down to this level right here from around 8,500 down to right around here, around $6,000. So all in all, there's around 3.5 million Bitcoin sitting right in this zone. And so I really believe that, if things get ugly, we kind of have this vacuum here. And if you've watched the channel before, we talk about these low volume nodes, and these tend to be risk zones. So this right here, you could think of as a low volume node. And what that means is a low volume node is a zone where there's simply not a lot of volume. And historically, what we see when we get into these low volume zones like here, when we're in those zones, the price can move up through those zones very quickly and down through those zones very quickly. You'll notice that we have another low volume zone kind of right in here from 28,000 all the way down to 23,000. Okay, so if we're able to break above some of these resistance levels, namely right around here, right at around 22,000, 23,000, then we have a low volume node above us, and you'll very likely see the price fly through that level. And we've seen this play out again and again and again since I've been talking about these metrics. So I know this is not necessarily the news that everyone wants to hear. And I'm sure no one wanted to come on and listen to me tell them that potentially their support zone, their bottom line support zone could be around $6,000. But guys, we have to look at this from a mature perspective. And that means that we have to accept the possibility that the price can, in fact, move down into these levels, right? Like, we see that we have a huge amount of support right in this zone here. Okay, so that's what we need to continue to watch then. And, to say that something can't happen because you don't want it to happen, guys, that's not a good way to approach your investments. And so what I'm doing right now is I'm dollar cost averaging like I always do, but I'm also aware of the fact, and I'm cognizant of the fact that we are at risk for moving into some of these lower zones, all right? And specifically because of the fact that there's not much to support us below around 19,500, you could see the price move into those levels. Now, you also have to consider the fact that there are sort of psychological levels. So you could see one of those start to form at maybe around 15,000. And so that could be another potential catching place, as could this location where we have around 100,000 coins right here at around 13,000, 14,000. But ultimately, if there's really bad news that comes out and things start to get ugly, I am looking for the price to move down into this 12,000 down to around 8,500 zone. And I think that would very likely be a next strong resistance level where you would see the price struggle to go below. And I would have a hard time, quite honestly, I would have a hard time believing that we would actually go much lower than that. But things can always get worse than they are. And, to not appreciate the fact that the markets are different right now, the economy is different than the environment we've been in since 2010. since the time that Bitcoin has been around and on exchanges. If you can't appreciate that fact, then you need to really consider what you're doing investing in a risk asset like the cryptocurrency market, because liquidity has been pulled out of these markets. And when liquidity is getting pulled out of markets, risk assets are going to be most affected. And that's exactly what you're seeing here, guys. And that's why it's going to be critical to continue to watch these levels. So that's it for this one. Until next time, as usual, see you.